Anthem Blanchard, he's the CEO of Anthem Gold. He's joining us this morning. And Anthem, it's great to have you with us, and thanks for joining us this morning. Let's begin with gold, the rip higher we saw throughout the summer, and how the move up has slowed some this fall. I mean, even today, in reaction to the Brexit news, kind of limited there. I'm wondering, do we need to see rates push lower again for gold to resume that trajectory?
Yeah, I think so. I've really been kind of curious about the reinversion of the 3-month and the 10-year. We'd seen really inverted yield curve for quite a while, really since about May, and we've over the last week seen a really sharp re-steepening. And a lot of times when you see this re-steepening out of a negative yield curve situation, it portends a lot of credit risk, a lot of running for safety. We saw repo numbers from the Fed with treasuries, 80 billion, the highest number, I think, in October since they resumed operations officially about a month ago. These are interesting indicators. Russell was brought up. That's an interesting indicator because, typically companies that derive more U.S. dollar gains during U.S. dollar strength are more coveted. So, when we start to see, things like Russell back off, things like gold back off, like we have in conjunction with this yield curve reversion, I think it really has to make us think, how close are we to the end of this credit cycle?
How about reaction in the overnight here so far in terms of the Brexit negotiation process, the optimism associated with Boris Johnson and Juncker able to agree on a deal? Now we need to bring it back to Parliament to see what they're going to do. Looks like gold's in a bit of a holding pattern as we wait for that next step, which I think is going to transpire on Saturday.
Yeah, it doesn't help for sure, the interest rate uncertainty. There's already so much distrust in kind of the top level lenders, and you're already seeing central banks have to step in. Bank of China announced quantitative easing as well officially. And really, I think it's going to force a lot of these governments, I think, to have to make deals in order to try to smooth out and ultimately be an equivalent of lowering interest rates and quantitative easing.
One of the things I'm wondering is, in the past, we've been talking about how gold had been benefiting from some of the banks that have been doing some buying, the actual physical. I'm wondering if that was somewhat in, that kind of insurance type purchasing amidst some of the uncertainties associated with U.S.-China trade, with Brexit unknowns. And now that some of those unknowns are starting to wind out, if we'll see some of that buying slow down, or what you've seen in terms of the pace of that participation from the banks.
Yeah, well, central banks have been buying gold bullion at a kind of torrid pace this year. Now, historically, it's interesting. Sometimes it's been contrarian, but really it's been more of a positive signal kind of the last 10 years or so, especially. And I think this might be a good indicator, maybe some front running by insiders, looking to kind of bolster up. The U.S. dollar is, roughly at about a 10-year high. When we look at the U.S. dollar index, we're over 100, historically. That obviously does reverse, and it's always gotten lower over the last 40 years or so. So, how much higher it could go? Good question. I don't know. None of us really do, of course, but I do think that we are looking at 9, 12 month, maybe maximum, legs in this bull market.
Noted. You mentioned, Anthem, in your notes how we're seeing some proliferation of the gold stablecoin coins, and noted that the Perth Mint, Western Australian government announcing a gold token. Can you explain or expand on those thoughts and what does it mean basically for the futures markets?
Yeah, sure, Ben. So we've been following digital gold for really 17 years personally, and as an organization for over 8. And really, it's been amazing. We've seen the government of Western Australia, through their Perth Mint, announce in the last week that they were going to have a gold stablecoin. So basically like a Bitcoin backed by physical gold. And this is the first government to really put the foot out. Bank of England had made some noise a couple years ago, but they decided to retract. So Perth has a really long-standing history of innovative products like certificates, and they're very well respected. So I think seeing a lot of different talk. We obviously heard about Libra stablecoin. Mm-hmm. We've had a lot of stablecoin in the news. Mm-hmm. Again, I think this portends to the market telling us that they want safety. It's flight to safety. whether it's in crypto, whether it's in traditional markets. We're seeing it on both sides.
Yeah, in traditional markets, you tend to see gold getting a lift associated with some of that desire for safety. But I noticed last I looked, it actually dipped back down below the 50-day moving average. Should this concern the bulls at this point? I mean, it's a technical level and maybe not necessarily something to get too worried about, but certainly something traders are going to be watching.
Yeah, and Bitcoin also followed that the last week,
Okay.
and I really do look at the major re-steepening of the yield curve.
Okay.
I think that both gold and Bitcoin, reacted negatively. Treasuries should do well in that kind of environment. Ultimately, it's an ultimate flight to safety, like what we saw 12 years ago. Gold did go down in dollar terms, but then it went violently back up in dollar terms, right? So, I think we're going to see a similar type of slingshot eventually. I mean, I think we're a little too early for credit contraction type price action in gold. However, I think that, a lot of this volatility and uncertainty, ultimately, you're seeing gold really benefit pretty well. I mean, if you look at gold the last 2 years or so, it's done quite well.
Noted, Anthem. What are you seeing in terms of silver recently? It also slipped back down below the 50-day moving average.
Yeah, and really silver's a good indicator. Again, I think that we're looking at more dollar flight to safety. I mean, it wouldn't surprise me if we saw the U.S. dollar index go higher from here. I think that the market's going to recognize a lot more stimulus is needed, more interest rate lowering is going to be needed across the board, across all major central banks. And the question is, how quickly will they act? Historically, they don't act quickly enough, and then they overact once they act. So, my guess is history will somewhat rhyme this time.
All right, well, we're going to keep an eye on these metals here. Anthem, really appreciate you joining us here this morning to help us take a look at some of the recent price activity, or lack thereof, whichever it may be. Certainly somewhat range-bound, but a good breakdown there, and we'll continue to watch here. Traders, that's Anthem Blanchard. He's the CEO of Anthem Gold.